the takeaway of who Fannie Mae and Freddie Mac is that they set all the guidelines, and they're good guidelines. They're trying to help. They open the whole spectrum and giving someone this opportunity to buy their own house.
Someone had to ask. I'm Amy Viaclia, and this show is built on one idea, that good questions asked of the right people make all the difference. Each episode, I sit down with someone who has the expertise most of us don't, and ask the questions you might not know to ask. Someone had to ask, so I did. Two names show up constantly around mortgages, and almost nobody outside the industry can explain what they actually do. Fannie Mae and Freddie Mac. Jay Sills, mortgage broker, a loan officer with Barrett Financial Group, describes them as siblings. Two organizations that don't lend you money directly, but shape almost every loan you could get regardless. Without them, the whole system most of us take for granted would look completely different.
Mm-hmm.
So today, I wanted to ask Jay to open up the hood and show us what's actually running underneath a mortgage, what these two engines do, and why they matter to someone who will probably never deal with either one directly. Jay, welcome back to Someone Had to Ask.
Thank you for having me.
Jay, let's start simple. What are Fannie Mae and Freddie Mac? And why do you think of them as siblings rather than two totally separate things?
Well, it's just because they're similar. Fannie Mae and Freddie Mac are two entities that help shape the entire mortgage platform, period. They are the two entities that create all the rules that work as a behind the scenes engine that you never see. Almost, I've made a joke about it with the Wizard of Oz, behind the curtain. They're kind of like that's who Fannie Mae and Freddie Mac is, and you didn't really know who the Wizard of Oz was. They was behind it. Well, that's the way Fannie and Freddie always kind of feel still to this day to me. But the bottom line is they generate all the guidelines, and there are so many guidelines that Fannie and Freddie have that are all similar now. That's why I call them siblings, first cousins. They're almost the same, very similar, but they also have a few things that are a little different. So what they do is they go in and they buy from banks, direct lenders, the mortgages. What happens is the retail mortgage lender will what called bundle up 50 loans together. They'll sell it to Fannie Mae or Freddie Mac and for money. And that takes those mortgages off their books and gives them influx of cash, and then opens up them the ability to lend more money to someone else for a mortgage. So that's why you see your loan getting sold. Misconception is that that your bank wants to hold your mortgage for 30 years. That couldn't be further from the truth. And I thought that. I was just like, I thought that's how they made their money and all this. And that's not really the case. Every bank, credit union, everybody wants to ultimately sell your mortgage because they want it off their books. They don't want to service the loan for 30 years whatsoever, because that doesn't really help them now. And so Fannie and Freddie give that opportunity, and that's why if Fannie and Freddie didn't exist, the whole mortgage process and the banking, we wouldn't have. It would be more of a luxury to buy a house than just something to strive for, because the guidelines would be way too strict. The bank doesn't really want to service a loan for 30 years. There would be different terms. So Fannie and Freddie have opened up everything. That's honestly the best decision that's ever happened. And Fannie Mae started, I think, in 1940. Then Freddie came along in the 70s. So,
Well,
and it was to make them honest.
okay.
That's why there's two. And it's that way that Fannie Mae couldn't just have a monopoly over everything. So now it's kind of a checks and balances where Freddie Mac came along and that's why they're similar, and that's why they give us the ability to have your interest rate as low as they are or can be. That obviously that's another conversation with rates. It just depends on what's going on with the market, inflation. There's lots of things that go into why interest rates are where they are. But as far as Fannie and Freddie go, they're just two entities that come in and buy the mortgage. You can't go in and get a loan from Fannie Mae and Freddie Mac. They're just the entity that will come in and buy the loan from the bank or mortgage lender.
Okay, so walk us through it. Once you originate a loan for someone, what actually happens at that point? Where does Fannie Mae or Freddie Mac come into the picture?
The automated approval, it's through their guidelines. So whenever I run an approval for someone, a pre-approval, I'll run what's called a dual automated approval, and that would be the Fannie Mae engine and the Freddie Mac engine. And so whenever I look at both approvals, Fannie Mae might say they want 1 month reserve as a condition for their loan to close, whereas Freddie Mac isn't requiring 1 month reserve. So I have to look at both to see which one is better. Well, I would say in the borrower's case, which one is easier, because as you know, you have to provide lots of information. You have to provide your pay stubs. You have to a first time home buyer could feel overwhelmed because it's almost like they're giving up their firstborn with some of the information that we have to ask for. But where that information comes from, it's not from your bank. It's not from just your mortgage lender or your broker. It's all combined guidelines set by Fannie Mae and Freddie Mac. Like on your automated approval, it lists out like this that we need. Now, a lot of it's the same: pay stubs, W-2s, bank statements. But there's other quirky things. It'll say, like, if you're borrowing the money for your down payment, that's called a gift, and you can get that from family. There's a whole set of guidelines how to use a gift. So, that's what the automated approval is for us. And Fannie Mae and Freddie Mac have all the guidelines. And whenever it's the approvals run online, we get what's called findings back. And so we just look at which one kind of suits us better to use.
So if someone's never going to talk to either of these organizations, these two engines directly, why should they care that they even exist? Like, what does this actually change for the person sitting across from you?
It doesn't change anything. That's the thing. I mean, it's just they're just the rules. That's nothing more to think about it with Fannie Mae and Freddie Mac. They just hold all the cards and are very generous. They're not, Fannie Mae and Freddie Mac is not some individual entity that is built on greed. It's really, I think, the opposite. It opens up basically the entire United States of being able to someone to go in and buy a house. So, I mean, as far as Fannie Mae and Freddie Mac is not going to affect you directly unless they come out with a guideline that you might not fit in. And that's where the moving target comes in, because guidelines do change. There's always additions and subtractions every year, something that's being updated. So that's where your loan officer comes in. It's our job to know what the rules are.
So I want to talk a little bit about conforming and non-conforming, because these are terms I think people hear that and they get confused about them. So what does it mean for a loan to be conforming and or non-conforming, and how does that connect back to these two engines?
Yes, they're still underwritten the same way through the automated approval through Fannie Mae, Freddie Mac. It's just that what conforming these days and non-conforming is anything that's above a certain loan amount called a jumbo loan. That's one non-conforming type of loan. Like these days, I needed to look it up. I should have looked that up, but it's like 750, 800,000. Anything above that is what would be non-conforming. Conforming is any loan size that's below that high level mark. And then conforming loans or conventional. It's one and the same.
Okay. How do Fannie Mae and Freddie Mac influence the rates for everyone, not just one individual loan? What are they actually doing behind the scenes, under the hood that
Yeah,
ripples out to the whole market?
yeah. Well, a lot of it has to do with, I mean, how many loans are being sold, because those are called mortgage-backed securities, and they're bundled together and they're sold, and that does affect the bond market. It's all very confusing stuff to me, but Fannie and Freddie keep the interest rate as low and as they possibly can, because they're the backing, they're the backing behind all mortgages being produced and originated. So they keep everything competitive. Whereas if they didn't exist, then banks would. I mean, the criteria would be a lot tougher with a bank, because they don't necessarily want to service a loan for 30 years and have that on their books. They'd rather sell it to Fannie or Freddie Mac instead.
If someone wants to know more about Fannie Mae and Freddie Mac, or how these engines work, or what kind of regulations, maybe either out of curiosity or they're just wanting to do research, have a better understanding, where do you go to stay up to date on the restrictions and the rules, and talk a little bit
Mm-hmm.
about the professional classes and the things that you have to complete each year?
Oh yeah. Well, each year we have to do continuing education, which is, for me, is 8 hours every year to renew my license. I have to hold a surety bond as well for Kentucky. Let's see. As far as if someone is wanting to know about Fannie Mae, Freddie Mac, really, what I do, well, is we have a handbook where it's online, and it keeps everything organized, and where we can just type in a certain guideline if I need to brush up on a particular loan, or get information. So I just go directly to Fannie Mae, Freddie Mac, just through our logins. Now, you're not going to have access to that the same way as I do, but anyone, if they want to know the guidelines, which is a good thing to do these days, it's so much easier. And I can tell whenever I go over these things, the things that I need. Most people aren't shocked anymore. It was a big overhaul. Like the first 10 years I was in this business, it was always sometimes a struggle, because of the people that I talked with were older back then, and the banking was different, and they didn't have to provide all this stuff. And it was sometimes a lot of pushing and pulling. Whereas today, people can look up, just Google it. That's all you have to do is Google, what's required of you when applying for a mortgage. Boom, you are going to see the same guidelines that I'm asking of you. So that's where I think it's a little bit better today, with information that you have access to, that we all have access to. And that would be the best. That would be probably the number one thing I would do if I was thinking about buying a house. Just Google, what's required of you.
Yeah, absolutely. So, last question. If someone walks away from this episode remembering just one thing about Fannie Mae or Freddie Mac, or both of them together, what do you want that to be?
Okay, I want that to be a positive feeling, because it's easier in lots of circumstances to buy a house than it is to go rent in certain situations. And I know that sounds crazy, but the reason why is Fannie Mae and Freddie Mac have given all these guidelines for every situation for someone. You can overcome a bad credit score with more down payment. You can overcome a bad credit score with, with reserves in the bank, but which all that means is having 1 to 3 months reserves in the bank that you would have after closing. So you could overcome some things. Whereas if you go rent from an individual, or go rent from an entity, their guidelines are just going to be like very black and white. Yes, no. If you don't have a certain credit score, we're not going to approve you. Whereas a mortgage, you really have a fighting chance in so many circumstances if you can prove yourself in other ways. Just because you had a bankruptcy, okay? Well, I mean that's okay. I mean there's actually a mortgage out there. You can if you had a Chapter 13, you could still buy a house even if you're in your Chapter 13. Whereas if you go rent someplace, you probably will be denied. The takeaway of who Fannie Mae and Freddie Mac is that they set all the guidelines, and they're good guidelines. They're trying to help. They open the whole spectrum and giving someone this opportunity to buy their own house.
Jay, I think this is one of those conversations that explains the machinery most people never see,
Right.
even though it's running underneath every single mortgage out there, including mine. And listeners, if this gave you a clearer picture of what's actually happening behind the scenes, who the wizard is, the next time you hear these two names, Freddie Mac and Fannie Mae, that's exactly what this show is for. If you found this conversation useful, share it with someone who's ever wondered why mortgage rates move the way they do, or who's heard these two names 100 times and never known what they actually meant. Next time, we're getting into something that trips up even experienced borrowers. We're going to be talking about rate sheets and why there are so many. We'll leave it there for today. Someone had to ask, so I did.